Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, December 12th, 5:03 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup, a daily market insight video. Market state, we're in an uptrend. Got a couple of weaknesses to take note of, though. These added earlier in the week. Market leaders still in growth mode. We had two hard days of sell-off in leaders on Monday and Tuesday. For the most part, that was just extended names pulling back to more reasonable levels. So keeping that green, yellow sub arrow on there. I'm going to talk about how we review our holdings in context of what we've seen in the market this week. Short term, still got the green arrow, but three of the indexes, the equal weight S&P 500, the small cap index, and mid cap index, are below their 21-day moving average. So again, something to keep an eye on. We've been playing ping pong a little bit with the small caps against the 21. RSP has been below it for 3 days. All the major indexes are above their medium term 50-day moving average and their long term 200-day moving average. So, what happened today after an inline CPI number yesterday seemingly triggered a strong rally, or was it just a strong bounce after 2 days of selling? Well, PPI hotter than expected, and also weak job openings data came in before the market sold off a bit into the open on those numbers, and some afternoon selling closing near the lows of the day, coupled with increases in the dollar and also in yields, made this a not so great day. Leaders, however, for the most part, held up okay. Didn't see any major blow ups. Here, the final numbers are 21 over 21. Although we had more down than up by an 8 to 12 measure, the average positive by 0.2 of a percent. The big eight, given some back, these have really outperformed and have been carrying the S&P 500, given some back down an average of 0.76%. The RG8, our rate growth ETF composite, down 0.9. S&P 500 opened down 0.2. Sold off early, attempted to rally, but as I said, last 2.5 hours, just some kind of a fade into the close. Ended up down 0.5%. Equal weight, a little bit better than that, down 0.37. NASDAQ 100 opened down 0.5%, closed right around there. A little worse, minus 0.65%. Equal weight down 0.33%. Dow down 0.5%. Mid caps down 0.5%. Russell 2000 small caps down 1.4. Global diversified 60/40 stock and bond down 0.5%. Our flagship GROTECTION portfolio down approximately 0.8%. Let's get into the charts, and we will start off as we usually do with the S&P 500. So the thing to take this video in context and all the charts that we're looking at, let's go by what we've seen this week. So Monday we had a bad day, leaders and the indexes. Leaders worse than the indexes though. Tuesday another bad day, making a lower low and a lower closing low as well, and leaders worse than they were on than relative to the indexes as well. CPI on Wednesday had a nice up day, and that gave us a line in the sand. When you have an up day off there, that means that we want to focus on the lows from Tuesday. Today, a give back day, a lot of inside days in the charts, meaning today's high and today's low. Today's high was beneath or lower than yesterday's high. Today's low was higher than yesterday's low. So this is kind of the uh, format that we're looking at for any charts that we're going to look at today. And really, what you want to gauge is if you've got something above Monday's high, it is absolutely having a fantastic weekend for the most part, it's a leader. You got anything below Tuesday's low, it's lagging. We saw the bounce yesterday. How did things act today relative to the bounce? Most of the things I saw pulled back on lighter volume, but you absolutely have to pay attention to the lows from Tuesday. And that's really what the action in the indexes looks like as well. So this is really after a nice move, 3 week move up. We've had about a 4 day consolidation now. On the upside, 6,100 for resistance. Yesterday's low. On the downside, remember that we've been talking about that 60-50 breakout level. We pulled back. Yesterday's low was 60-30. Let's go to the 60-minute chart. Here's that 60-50 breakout level. Let me draw that line that we had as one of our keys earlier in the week. Wednesday, we broke below that, but on the downside, we were concerned about 6,000 to about 6017. You can see 6017 over here, 6020 over here. So if you're a bull, the first thing you want to do is get back above that breakout level. That means that it turns a breakdown into a failed breakdown. And we closed right at that key 60-50 level again today. So again, need to pay attention to that. And then you've got a 50-point range there between 6,000 and 60-50. And in there, we've got the lows, as I said, 60-30 from Tuesday. We've got 60-17 and 60-20, which were these prior levels over here on the left side of the chart. The 21-day moving average is now above the 6,000 level. So there's a lot of support here if we would pull back into this range. So if you're looking for levels 60-30, 60-20, 6,000, we break below 6,000, certainly not good. And then of course, keep an eye on Tuesday's lows if you own leading stocks. So that is the daily breakdown on the S&P 500. Let's go to the NASDAQ 100, some serious relative strength on this index over the last 2 weeks. Still above the 8 day and an inside day today on the NASDAQ 100. Let's go back to the S&P 500 very quickly. We're basically sitting on a flat 8 day moving average on the S&P 500. Our preference always is to be above all four moving averages. That's the ultra short term 8 day, short term 21, and then you've got your medium term 50, long term 200 day. And of course, the market never gets into serious trouble unless you break below that black line. That's the 200-day moving average, and that's up to the 5,500 level now. Dow Jones Industrial Average can't get a break. UNH, serious relative weakness over the last 2+ weeks. UNH leading this to the downside, broke below the 21 today. Mid caps closed below the 21 yesterday, bounced back above it. On Tuesday, bounced back above it on Wednesday. Today, closing back below it and seeing something that we don't want to see. This declining 8 day moving average now appears to be acting as resistance, or it has anyway, on the last 2 days. That's what capped any advances. Bulls want to see a reclaim of the 21 and a reclaim of that declining 8 day moving average. Let's go to Russell 2000 small caps now. Here's that 8 day moving average kind of acting on a closing basis anyway, as a resistance level clear break of this 21-day moving average. And we closed out our Russell 2000 small cap position today. If you are measuring from low to high after this big 5 day rocket up, we're just a little bit below the 50% level of a retracement, and that's kind of normal. But if you're looking for the healthiest of markets, you wanted to hold the 21 on that pullback the way we did on Tuesday, bounce on Wednesday, but given that back today. And then, of course, this index is much worse than that four candle combination that I drew, which is the down day Monday, down day Tuesday, bounce Wednesday, inside day today is what we saw for most of the leaders and what we saw for the S&P 500. That's not what we've seen for the Russell. Disappointing. Let's look very quickly at, you can see where the divergence is on the S&P. This is VTV. This is a value index measurement. This not only has broken the 21, it's also broken the 50-day moving average. Compare that to VUG. This is the growth portion of the index. These are some Vanguard indexes. You can see how strong that was if you go just with the S&P 500, SPLG. SPL. Yeah, it is SPLG. SPLG, sorry, SPYG. Here's the growth component. You can see the relative strength there. Looks a lot like the NASDAQ 100 SPYV. The value half of that looks like VTV. Major relative weakness below the 21 and below the 50. So it is, in this case, now the big eight that have been, or the Mag 7 that have been holding up the S&P 500. Value stocks certainly lagging as money rotates into tech with their pristine balance sheets. And we've also seen an increase in the dollar and in interest rates over the past week, and that's not helping these indexes either. Here's the RSP, the equal weight S&P 500, three closes below the now declining 21-day moving average, major relative weakness over the last 2+ weeks. All right, those are the major indexes. Let's go to the VIX. VIX still cooperating just fine with a 13 handle. It was up about 2.5% today. Nice tight action in the VIX over the last 2 weeks. Tight action is what we want to see on the S&P 500. We're at about 0.75, about 0.75% on a daily range over the last 21 days, and much tighter than that if you look at the past 2 weeks for the S&P 500. So there's the VIX. Let's go to the dollar now. Coming back into this range where we had the negative reversal, but now 5 days up on the dollar, coincides with 4 days of market weakness. There's the dollar. Let's look at the UUP. This is the ETF, and there's that abandoned baby setup there. We're not quite to, you can see I've got an alert there set if we pierce the low of that candle, but 5 days up on the dollar now. How did that? That's normally strong dollar, normally bad for precious metals. Well, wasn't the last 4 days, but we gave some back today. Gold down 1.5%. GDX gold stocks breaking back below the 21, down 3.7%. This declining 50-day moving average, acting as resistance on the bounce. That would have been a great opportunity to short on the failure there. And SLV silver gapping down 2.9%, back below that 50-day moving average. Bitcoin down on the day, hanging out near the all-time highs, down 1.4%. On to bonds. Here's where some more trouble is. Bond prices down for 4 straight days. Down 0.4%. If you know if prices are down, that means yields are going to be down. Yields are going to be up. They move inverse. Here's TLT, 4 days down as well, down 1.2% today. Let's go to the yield. Here's the TYX, 4 days up. This was the consolidation that we broke down from 2 weeks ago. We're bouncing and we're right at the top of that now. So bulls want to see today's highs kind of hold on the long bond. That's the 30-year. TNX bouncing strongly as well for 4 days now. Here's that consolidation that we broke down of approaching the bottom of that. So again, don't want to see yields go too much higher if you're a bull. And that did coincide with the hot PPI data today, impacting both of those, both the dollar and yields. So that's our inter-asset correlation. Let's go to the tail of the tape. Some deterioration in the stochastics on what we track for the 5 indexes. It rolled over. The RG8, all 8 have rolled over. NASI, that's the McClellan Summation Index, that's flat. The dollar now rising, that's red and highlighted. TNX yields now rising, that's yellow and highlighted. Percent of stocks in the S&P 500 against their 5-day moving average is still, it's in the 30s. That's low, and it's set up to rally. But breadth hasn't been there, and the RSP has been lagging. Some sentiment. AAII updated today. Bulls 5 points lower than what they were last week. That's a contrarian bullish signal. However, NAAIM, this is asset managers, all the way up to 99, 14 points higher. And we've got that highlighted in red now, as that is a red flag. Anytime you get right at or near the 100 level on NAAIM has coincided with being close to pullbacks. Now, maybe we got that pullback, and by the time we look at that this week, It will pull back some because this weakness this week may impact this. They say there's nothing more than price to impact sentiment. But we haven't been in sync with AAIA and NAIM, and that is something that we have taken note of and mentioned here. So the news, as we mentioned, PPI, also openings, both higher than expectations. The keys coming into today, that 60-20 to 6100 range on the S&P, we're inside of that and also above that 60-50 breakout level. Did growth leaders follow through after strength yesterday? No. Mild to the downside, though, not brutal the way the selling was on Monday and Tuesday. So the day count, we're in a 4-day consolidation now, 8-day exponential moving average. We're sitting right on it on the S&P, and it's flat, 18 days above the 21-day moving average. As far as individual sectors go, the only two spider sectors up, XLC and XLP, that's communication services and staples. To the downside, gold, and silver stocks, 9 out of 11 of the spider sectors, biotechs and commodities down as well. Only change to the portfolio was to sell our small cap index, URTY. That brought our adjusted beta down to 1.75%. Our open heat or rebar, that's Revere estimated balance at risk. This is if all of our stops were hit, 6.84% to the downside is what clients would see. Bottom line on the day, high PPI triggers broad weakness, yields and the dollar higher. Leaders okay though, as they experience mild pullbacks. Keys for tomorrow, we're keeping an eye on this S&P 500 range, obviously, and look for some more. We want to see some more action and growth leaders like we saw on Wednesday. 1 day rest after the after the strong bounce on after the strong bounce on Wednesday, after 2 hard down days, we saw for the most part a down but inside day today. We want to see Wednesday's highs taken out if something has not taken it out, and that's how you should be judging your stocks versus what we're seeing on the indexes. All right, let's get now to what we hold in GROTECTION, and we're going to give them a grade based on how they've been holding up recently. So this is the individual holdings that we have and Bitcoin. So Vertiv, remember what we're trying to compare: a down day on Monday, another down day with lower low and harsh selling on Tuesday, a strong bounce up on Wednesday, and an inside to down day, uh, but not breaking the Wednesday or yesterday's lows. That's the setup that we see on VRT here. However, it is below the 21-day moving average, so we'll give this one a C based on that. A-Lab, obviously acting better than that 4 candles. This is an A, trending higher above the 8-day moving average. Bitcoin, better than what we saw there. Bitcoin, kind of goes to its own drummer. This is above the 8, so it gets an A. Reddit, uh, up on the first down day, down on the second down day, and then a tight inside day when we bounced yesterday, down day today. This is an A, above the 8-day moving average, and certainly holding, of course, above the lows of Monday and Tuesday. Uh, Dutch Brothers, down, down, up, down. This is in sync with what we're seeing. Below the now declining 8-day moving average, though, we'll give this one a B minus. Tesla, well, A, no question about it. Three strong up days this week and a tight range pullback. One of the strongest stocks in the market. Snowflake, down, down, barely up. That's a negative, and then down today, making a lower low relative to the next two and below the 8-day moving average. This gets a C. We're near our stop on this. Just lack of, it held up fine. Really, this was a leader last week with this move up above this range when it broke out, but that breakout didn't hold. Couldn't handle it the Monday and Tuesday down days. Weak bounce on Wednesday. Not a good day on Thursday, making a lower low. So we'll give this one a C minus. CRDO, down, down, up, inside, right in sync with the market, bouncing at the 8-day moving average. This is an A. Those are all the holdings, so that's all I'm going to rate. Let's take a look at what else was up on the day that is in the 21 over 21 rubric. We're keeping a close eye on this. This is obviously an A setup off of its earnings gap up and making a higher high. Bloom Energy, we got stopped out on this with the break of the 8 day and not having a profit. It did bounce at the 8 day moving average and up 5% today. Twilio continues to be A rated. TCOM, this is a Chinese stock, and Chinese stocks had the big gap up on Monday because of expanded stimulus. 2 days down, it did bounce today as we wanted it to. And team is the last one to the upside. That will do down, down, up, up. So outperforming there on team back above the 8 day moving average, and that one is an A. Let's go to the downside and see if there's anything else that we didn't look at. Looks like we did most of them. We'll do SMR. This was down 3%, down, down, bounce at the 50 day. It's below the 21 day moving average. So if it doesn't reclaim that, it'll come off the list for next week. For now, it bounced at the 50 day moving average the way we needed to. But this one is a C minus, being below the 21 day moving average. That's going to wrap it. As always, like to hear from you. The email's don@revereasset.com. The phone's 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Our flagship portfolio is named GROTECTION. Dual mandate, seeks to grow your nest egg when the markets are in an uptrend. Pull back a little bit as the markets pull back and break various moving averages. We lighten up. If you go into a bear market, we get the heck out of the way, such as 2022. And it's a common sense approach. You don't go out every day dressed in shorts and a t-shirt, regardless of the time of the year. Why should you treat your investments the same way? This is what buy and hold uh, people that don't know how to read the technical picture of the market. This is what they do. Every day is the same for them. Buy and hold, just sit there, hit rebalance a couple times a year. That'll get you into serious trouble if you encounter a bear market close to retirement. Now is the time. Your account should be near highs if you're at another advisor, but that advisor will not protect the downside if the next bear market comes. Now is the time to bring your assets over to Revere if you want to protect the gains you've made during the nice uptrends over the past 2 years. And with that, I'm going to wrap it for Thursday, December 12th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.